Lovely, that's great, thank you. Well, again, just to welcome you all into the room this afternoon. And I am presenting my price action trading methodology together with my personally developed STB Trend Trader software. And I will show you how both of these amalgamate together to give us a decent edge in the market, should I say it. Now, before we start, I think we have to look at our disclaimer. Now, this is a very much a condensed version of it, but please remember all that trading in financial markets involves substantial risk and may not be suitable for all investors. And if during my presentation you hear me talking about buy and sell signals, please do not take those other than anything than educational purposes only. And as the last couple of sentences says, before entering into any financial trades, proper financial advice should be obtained from a qualified financial advisor. And remember, losses certainly can exceed wins trading the game. But the purpose of today's webinar is not for that not to arise. I think the aim of all traders is to be successful. That's why we all want to begin trading. We want to have, we want to improve ourselves, and we want to be successful. And I'm going to show you, as I've already said, how you can achieve this using my price action methodology and my personally developed software trading tool. Now, just let me tell you a little bit about myself. I know perhaps many of you in the room today have heard me before, and some of you might not have, but just very briefly, I'm not going to spend too much time. I started out in business at a very young age, something that was out of my control because my dear father passed away when he was only 42 years of age, and he was in business. And that meant that I had actually left college. I'd started college in Belfast, from, as you can tell, I'm sure from my accent, although I live in Nottingham and have done for 21 years, I'm actually Northern Irish, bred and born. But anyway, that put me into business. I left college and went into the family business, and again was very ambitious, probably still am very ambitious, and I think you need a little bit of ambition to try and better yourself. And from a young age, I was always very keen on the stock market. Now, my first trade was in the early 1980s, and it was an exceptionally profitable trade, and that was probably one of the reasons that enabled me then to further interest myself in financial trading. It was a trade that I made £2,000 in the space of 2 days, but like many of you, it was outside my control. It could have went the complete opposite way, and I was only listening to a colleague that I'd known that was in business that had been trading much more than I had, because I think this is my very first trade, and it was him that actually recommended this particular share. It was a penny share, and for any of you that might remember, it was a stock called Rotaprint. That's in fact, it went bust not long after I came out of it. Maybe it was the spell that I put on it, but anyway, it was good to me. This led me later on in my trading years that I wanted to begin trading the derivatives markets. I had traded shares after my first trade and got burnt and done reasonably well. And as I said to you, sorry, got burnt in the 1987 stock market crash, but it hadn't quelled my interest. And as the slide says here, I couldn't wait to begin trading derivatives. But truthfully, I hadn't a clue. And in my quest to try and learn, I had attended I did attend a few trading seminars. There would not have been the selection then that there are today. But on the seminars that I did attend, I always came away from them feeling pretty empty. Yes, the knowledge within them about the tools that there was available to trade the derivatives markets was certainly there, but as far as a methodology was concerned, it was not. Again, I tried to then self-teach myself. I made lots of costly mistakes, and I think, to be totally truthful, it was a disaster. But how did I change my fortunes? And I think what was so important to me, and what is so important to everyone in probably many walks of life, but certainly no more so than in the financial trading part of life is the fact that I was introduced to a mentor. And this was a person who had developed many trading systems for large institutions, all based on price action. Now, we talk about price action today, everyone, and it's probably the in word this last year or two, because you hear a lot about price action. Let me assure you, and I can honestly say this, price action was something that was never talked about away when I began this trading journey. And providing it is taught properly, it is a very, very important way in which to go forward in trading the financial markets. Now, once I began to learn trading using price action and being able to read the price action properly, I immediately began to see a positive difference in my trading results. And this was all simply because I now had a methodology. I had a methodology that had a very, very definitive set of rules. And I was able to read any instrument's next likely direction based solely on its price movements. But most importantly, which is very key to any methodology that any of you are going to use or do presently use trading financial markets, you need to know exactly when you are wrong. And the reason you need to know exactly when you're wrong is because it is there that you use your protective stops, and it is all around that particular area that you then are able to base and begin and lay the foundations for a trading plan. Now, when I seen that price action was making an immediate difference to my trading, it led me to believe that this knowledge would also be very beneficial to others. And it was because of this that I first began teaching in 1998 my price action methodology. Yes, 1998, would you believe it? So I must be, I certainly, the years go by very quickly and I'm starting to feel it now, let me tell you all. And the reason I decided to do this was because I knew many aspiring traders, just as I had been, would find this methodology the answer to the same problems I originally had, which was making successful trading decisions. But before we go any further, let actions speak louder than words, and let's just look at a few of the very recent trades that we have. And this is the S&P this morning, the S&P 500. Again, you can see with the buy signal in here marked with the blue arrow at 25.67. At the time of this screenshot, which was, you can see it was the 16th of November, it was around 10.50. It had rallied 7 points. I believe it's probably went higher since that. That would equate to $350 per contract, that move alone. Bitcoin, something that I've never ever mentioned in one of my presentations before, but something that I've been looking at pretty intently this last number of weeks. And just a signal that came in yesterday, or sorry, I apologize, late on Tuesday evening. And it was trading actually very recently 100 higher than this. This was a 700 point, which would have equated, if I had taken a screenshot about a half an hour, 40 minutes ago, to an 800 point move. This is all done based on our methodology, based on, you can see my blue bars, which I will explain to you and what they mean later on in the presentation. This is the DAX this morning, 16th of November. Buy signal earlier, 12,980, now plus 70 points. Pound yen this morning, 5-minute chart. Buy signal, 148.94. It had since rallied 46 pips as per the screenshot that I took at, again, around 11:30 a.m. So this just lets you all know, folk, that what I'm going to show you and what I'm going to demonstrate does work, okay? It is a proper methodology based all around a very defined set of rules, and then further enhancing that, then that equates into having a very strict money management and risk management plan. Now, the price action methodology begins with being able to read, number one, basic price bars correctly, a unique pattern that occurs at every top and bottom and in every time frame, and then, which is the key, which is the ingredient. The top two are the ingredient, and the bottom line, the bottom sentence here, is when we put it all together. That is then trading the trend based on the position of the tops and bottoms of this unique pattern. Now, all my price action analysis is done by reading the open, high, low, close bars, otherwise known as OHLC. And I'll just briefly explain to you why. Now, the chart to the left is what we call an open, high, low, close chart. It's got a little tick to the left, which is the open, tick to the right, which is the close, and obviously the top of the bar is the high, and the bottom of the bar is the low. Now, the candlestick chart to the right is different in as much as the bar to the left, and my price action analysis based on this bar, is very much dependent on where the close is to the high or to the low. Whereas the bars to the right, the candlestick charts, the body of the candle is very much dependent on whether the candle has opened or has closed above the open or has closed below the open. If it is closed above the open, it is a hollow candle. And if it is closed below the open, it is a filled-in candle. But this is having the relationship in a candlestick chart is where the open is in relation to the close. But the importance that we have is where the close is in relation to the high or low, not to the open, as far as the open, high, low, close chart is. And the reason for this, we want to determine how much buying and selling pressure is in a particular bar. And if you take the low of this bar to the close of this bar, that determines how much buying pressure. The selling pressure is obviously only from the high price to the close price. Also, why we put more emphasis on the close rather than the open is because the close is the latest price. You take the FTSE, for example, this morning, folks, the opening price was 8 a.m. but the closing price will be 4:30 p.m. this afternoon. So it's away 8 hours. The oldest price is the opening price, and it is the price that as far as the daily bar and the FTSE is concerned, happened 8 hours previous. So what does the basics of price action consist of? Well, the basics are being able to read single vertical bars, being able to read dual vertical bars, inside vertical bars, outside vertical bars, and being able to understand double tops and double bottoms that become support and resistance levels. Now, knowing how to read each of these setups correctly, and then knowing how to take action based on their setups is a very good basis from where to begin one's trading journey. And today we're going to look at just analyzing one single vertical bar. And this is something that I can assure you, please do take on board, because it is such a powerful thing to know as far as a trading arsenal is concerned, because it always gives you objectives. And then it also lets you know when an objective that you had a belief in, if it was going to go up, and it turns around and goes back down. It also lets you know exactly where you're wrong, just by being able to correctly analyze a single vertical bar. And in this example here, we're just looking at these hypothetical prices. The high price here is 200, the low price is 100. It happened to open at 120, but I'm not really bothered about the open. But you can see where it closed at 180. And we can see visually, this bar closed closer to the high than it did to the low. And what does this mean? Why do you really need to know this? Well, the reason you need to know this, because this is giving us a probability that the next bar is going to break to the upside, because this is what we call a bullish bar. And how do we determine a bullish bar? Well, we get the mean of the bar, which is the average price of the bar that consists of the range. So in other words, in this particular example here, the low was 100, the high was 200. if we subtract those two levels, we have a range of 100. That means that the mean, the average price of that bar, the balancing point of that bar is 150. If it closes above 150, it's a bullish bar. If it closes below 150, it is a bearish bar. We also can further analyze this to give us and convert it into probabilities and percentage purposes. All we do is we get the range of the bar. Again, in this example, it's 100. We see that it closed at 180. So therefore, the low of 100 to the close of 180, that is the buying pressure in the bar. So that's 80 points. If we divide the 80 into 100 and multiply by 100, we get, well, it's pretty simple in this one. It's an actually 80% probability. It's an 80% bullish bar, which means we've got an 80% probability of it breaking to the upside first before it breaks to the downside. Now, how do we use this in a real-time basis? And how we do this is just as per the example here. And I will show some real examples in our next couple of slides. A bullish bar, close here, closer to the high, closer to the low. But what happens the next day? So let's assume this is a daily bar. So what happens? The market the next day trades inside this bar. It goes down. It goes down. It goes down lower. But because we have a bullish bar here, and let's just use the previous example, with an 80% probability that it's going to break the high of this bar before it breaks the low, we know that the only time that this bullish bar fails is if it breaks the low without breaking the high. We also know that if we were to take buy signals based on this bullish bar close, we know that we can have our stop underneath the low of this bar simply because we know that if it even breaks the low of this bar by 1 point or 1 pip, it is wrong. It has failed. But the objective, obviously, is to try and buy it as low to the low of this bar, knowing that our risk would be much less if it's down here to there, because that's where a stop would be, compared to being up here. But this is how we use this knowledge. So many people would probably be, if you weren't able to analyze a single vertical bar correctly, they'd be looking to sell this market, and then they'd wonder why it comes down here and it hasn't went on any lower. The reason being, this is the real magnet. The big magnet is up here. It's pulling this market back up. This is only giving us further opportunities to go long a particular market if a setup such as this was in place. Let us look at a very recent chart of the FTSE 100, and this was as per last night. This last bar here was yesterday's daily bar, and the most recent weakness in the FTSE came in, and the market has fallen 100 points since. Now each bar here represents 1 day, and there was a bearish bar. What had we in here? We had an inside bar, so we knew that the probability of this bar being broken to the downside, even when this market was trading up here, we still had this probability. This was only giving us a further opportunity to short the FTSE, knowing that our probabilities of it going lower and breaking these lows were much greater than it going and breaking these highs. I apologize. Bear with me 1 sec, sorry. It certainly just shows that we're live, everyone. I apologize, and I haven't even got the phone here, so I was just afraid of it going on to the answer machine. I think I have it stopped. I think I have, perhaps I haven't. But anyway, the market went down and it achieved its daily price action objective of here. Another bearish bar, another bearish bar. Ignore this. This was Sunday night's trading. This is when it opened on Sunday night, so ignore this. Monday went lower, Tuesday went lower, Wednesday went lower, and as this morning we're actually trading within the range of this bearish bar here, and the low was 73.51. Now we know the market from here to here the market has went much lower, and at some stage it will fail. At some stage it will turn around. Obviously, I would prefer it to go lower and then give us a buying pressure coming into it. But just by being able to analyze each single bearish vertical bar, you're able to not have to spend hours in front of your computer. You're able to analyze it each evening and knowing exactly where your stop is on each occasion, because you trade your stop down to the high of each bar. Because remember, the only time that you're wrong is if it breaks the high. Let's take a look at another example. This is the DAX in a weekly chart. This is right up this last, right up until yesterday evening. Weekly bullish bar started off at 12,091, and from 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks, the market went from 12,091 to 13,505. It made a 1,400 point move. But then look what's happened here, folk. We come up and we've made what we call an outside vertical bar, something I haven't time to go into today during this presentation. But it made a higher high. So it achieved its weekly price action objective here. It went and took that high out before it took the low, but then it came back down and started to show weakness and took the low out. So last week with an outside vertical bar to the downside, giving us a high probability that we were going to go lower for this week. And so far we went lower. Last week it closed above 13,000, roughly around 13,100 was it, I believe. And as yesterday, it was down at per the screenshot here last night at 12,952. But look at this move, just by being able to analyze each single weekly vertical bar. The same thing in the DAX here. This was a bearish bar, an inside bar. Look at this bar here. The market was rallying. US was rallying. You'd think that this was going to fail. But we knew from a price action perspective that the greater probability was for it to break the lows. And we knew that it would only fail if it broke the highs. Now, if you have a bearish scenario here, with the probability of it breaking the lows, and it comes and does the complete opposite, that is like turning something on its head completely round. It turns a bearish scenario, if this were the case here, into something quite bullish. But again, in this opportunity, the objective is to sell it as close to the high of this bar, because we know that the only time it fails is if it breaks the high, when it should break the low, because it's a bearish bar. And the market went back on down. And again, as per the slide here, it fell 300 points. Dow Jones daily chart, from going back an 800 point move in 12 or 13 trading days, just by trading each bullish bar the whole way up, analyzing a single vertical bar, knowing on each occasion that the only time it failed was when it broke the lows, and not when it broke the lows when it should have broken the highs. Now, putting the basics of price action together with what I call my vertical bar trading pattern, secret pattern, I'll tell you why I call it a secret pattern later. Trading this is going to be your key to trading success. And this is how we get into new trends at the most opportune times. We all want to be trading with the trend, and more importantly, it also lets us know when the trend has been exhausted. And remember the saying, everyone, a trend is a trader's best friend. But the challenge from a trading perspective is identifying a trend at its earliest stage and then following it with as little risk as possible until its exhaustion. Let's look at what a trending market is. A trending market is higher highs than the previous high, a higher low than the previous low, a higher high than the previous high, and there are retracement then to be a higher low than the previous low. But as the last move up here indicates, and the arrow moving down, you can see that this high was going to be a lower high than this high. And that would indicate automatically that this uptrend is more than likely over for the time being. And it's when you have got a methodology within determining when these highs and lows are confirmed and are in place, and something that has been tested through many, many, many years of trading, then this is what puts us in the driving seat, so to speak. Now, trading the trend is not just as simple as drawing a trend line. And the reason I say this is because if a new trend is only beginning, you don't know where to draw it from or to. It's different when a trend has been in place. Very easy to draw trend lines. But if you're trying to get into the new trend and a new confirmed trend at the most opportune time, then you really know where to draw your trend line from. Trading the trend based on the price action of the vertical bar trading pattern lets you know at all times what direction of the trend is in that instrument. And that applies to any time frame. You can open any chart on any time frame, and when you know how to read and understand the vertical bar trading pattern highs and lows properly, it means then that you will be able to read the trend within that market. Now, what is the vertical bar trading pattern, and why do I call it the secret pattern? It is probably known more commonly as swing highs and swing lows. And I call it the vertical bar trading pattern highs and lows. And why do I not call it swing highs and lows? Well, why I call it the secret pattern is because I have a very disciplined set of rules that determines when a vertical bar trading pattern, top or bottom, has been formed. And the reason we have this set of rules is because we know at the time and not after the event. If any of you have been trading the markets for some time and you go into a chart, I'm sure it's very easy for us all to turn around and say, oh yes, there was a swing high, there was a swing low, there was a swing high, there was a swing low, etc., etc. But it's knowing at the time that those vertical bar trading pattern highs and lows were formed and confirmed is key, not after the event. If we're looking to trade a particular market in any time frame, we need to know when we can base our trading decisions on the confirmed highs and lows that are determined by either higher highs or higher lows, in other words, an uptrend, or lower highs and lower lows, a downtrend. And this is what is so very key. So let us look what I mean. Now here's the Dow Jones 30, the industrial average, a daily chart. And again, this is a very real chart. This is a chart that is exactly real to this very minute, because this is the live market, and the live market is not open today yet. And this was the close yesterday. But just to explain how we determine the trend and when we know exactly the trend has changed, let me just explain. Down here, we have a vertical bar trading pattern high. And that there was a lower high than this high to its left. And with a lower high, then the objective is, and we label this, that this market goes below the previous low, because if we've made a lower high and the market's in a downtrend, what is expected if it's going to continue its downtrend? It's going to make a lower low. Everybody understand that, I'm quite sure. The market went back down. It would mean then that when any retracement that this market made, if it's going to continue in its downtrend, it would make another lower low. It would make a confirmed lower high, and it will continue down to make a lower low. But in this particular instance, this market, you can see there was a little bit of not very much, trading within ranges, but no confirmed vertical bar highs here, no confirmed lows down here. And this market eventually went back up and it broke through this high at 22,085. Now, once it broke through this lower high, even by 1 point, remember folk, even by 1 point, because if it's going to continue its downtrend, remember, it shouldn't break this 22.085, which was the previous confirmed vertical bar trading pattern high. We knew this Dow Jones had now changed trend on a daily time frame because each bar represents 1 day here. The market went back up, and then because of the changed trend and it made a new high, we knew that the next retracement, if it made a higher high, for it to continue its trend, it needs to make a higher low. So the retracement would be a higher low than the low down here. And again, we got a lovely, beautiful textbook higher low confirmed vertical bar in place down around these levels. And as I have indicated here, there was a conservative entry just trading. Sorry. There was a conservative entry at 22,380. And the market rallied over 1,200 points. Now you can see the market is starting to retrace here, but it went from 22,380 to 23,600. And that's just trading daily charts. And it's the power of the vertical bar trading pattern and knowing exactly at the very point, not after the event, at the very point when it had changed trend. And then based on this, once we got a signal in here, 22,380, when we got this confirmed, then we knew where our stop was going to be. Our stop had to be underneath this vertical bar trading pattern low, because we knew if that market was going to go up, if it came back down again, and it broke that low by 1 point, we knew it was then likely going to change trend. It had changed trend, and the confirmation was that it would probably come back down and make a lower low and then a lower high. So therefore, we knew exactly when we were taking our trade around these areas where our stop was going to be. We knew that our stop had to be under this vertical bar trading pattern low. So therefore, at the time of our entry, we knew where our stop was going to be. Therefore, we can assess our risk and trade our size lot in conjunction with our account size and our risk. Because all we can judge, I know looking back historically, all we can judge at this particular time of entry is where our stop's going to be. Because did I know, did anybody else know that this market was going to go into 1,000 or 1,200 point rally from this point? Of course we didn't at the time of our trade entry. So therefore, once you have a methodology, the next most important aspect of trading is having risk controls and a risk and money management plan. And with the methodology that I teach and with everything associated with our price action methodology, you will know at the time of your entry, whether it be long or short, where your risk is and in any time frame chart. Another example is the E-mini futures on the 14th of November, Tuesday of this week. Again, I know we've got the software in here and it's colouring the bars, but most importantly, what we do is we find our trade based on our vertical bar trading pattern, and then we let the software confirm those trades, which again I will show very shortly. But in this particular example here, a high, this market went back up and it made a slightly lower high, but even if it was a double top, it's all right. It made a slightly lower high. Market came back down again, a higher low, but the bars were red. This is the advantage of our software, so you know buy signals in here. The market came back up and made a lower confirmed high than this high. The market was indicating then that we were now in a confirmed downtrend. Lower highs, lower lows, lower low, lower high, lower low, lower high. And look where the market went. It fell to the equivalent of 15-point move, which is a $750 move. And this is the E-mini, which is the S&P 500 mini futures. Each point, each bar here, each point, if it moves from 25.73 to 25.74, that equates to $50. It moves in quarter points, so it's $25 each point. It's just to demonstrate on the different platforms of each individual instrument, how effective our methodology works.
Ian,
this is the US Canadian dollar. Yes, Simon?
Just we've got a few questions starting to rack up, so I was wondering,
right? Yes.
When would be a good time for us to pause?
Well, I'll tell you what. I've got another couple of slides of this here, and then we'll stop before I get in to show the software in action. Would that be good?
Absolutely fantastic. So everybody that's here, if you've got any questions on your mind, just take the next couple of minutes, please, to use the chat box to write them down, and then we'll get into these questions in a few minutes.
That's great. Thank you very much. But just another couple of slides showing the vertical bar trading pattern and how it works. In this example here, we had a high, which was a higher high than the previous highs down to the left. The market made a higher low. The market goes back up. But what's significant here, look, we made a confirmed lower high. So therefore, when we made a confirmed lower high, for this the market to continue in its uptrend that it was doing down here, this here should have went up and made a confirmed higher high. But the market, when it made a confirmed lower high and then didn't go back down to make a confirmed lower low, the market then, once it broke through this high again, it was back into its uptrend again. And then it got this first retracement, and your entry was here. And this was in a 15-minute US Canadian dollar Forex chart on the 13th, 14th of November. And it was a 50 pip move. Euro US dollar, the exact same principle applies. Higher highs, higher lows, higher highs, higher lows. And each one of those are confirmed higher highs and higher lows. And the next chart here, I will be able to point out to you, just in case some of you think, oh, Ian, you've missed a high or you've missed a low. But again, if you look from the bottom left-hand corner of this chart, we've made a high here. We've made a low. We come back up and we made a lower high. What does a lower high mean, everyone? It means if it's going to continue in a downtrend, we need lower low. It should make a lower low. Did it make a lower low? No, it stopped. It made a higher confirmed low. The market then, with a higher low, with the objective of it making a higher high. Up it goes and it retraces. Up it goes, it retraces. Higher highs, higher lows. Now, for some of you that are wide-eyed, you'll notice that I have drawn my vertical bar trading pattern confirmed low here and not here. And the reason for that is that was not a confirmed low. And the power of being able to use the confirmed lows compared to those that do not know the rules and are trying to pick out the swing highs and swing lows is certainly much more powerful. Market goes back up, higher high, higher low, higher high, higher low, higher high, and we knew once it broke this particular low, it had then changed trend. It went much lower. It meant then that the next high should be a lower high. Was it a lower high? Yes, it was. And quite interesting here, this market retraced to the very previous vertical bar trading pattern low, which would have been support. Once that support's broken, it becomes resistance. The market then changed trend, back up through it again, and a higher high and a higher low. That high was higher than this high. If it was going to continue in its downtrend, it should have went lower. Pound yen 1 hour chart. This particular move from down to the bottom here, it was at 140.96 and went to 146.08, a 600 pip move. The same methodology, time's going on. Now I'm sure you can see the difference knowing how to trade in the direction of the vertical bar trend and how it could help you with your trading decisions. But over many years, I've been using my price action methodology. I often thought if there was something I could add to my trading arsenal that would further complement my whole philosophy, something that would perhaps make my setups easier to see or even confirm. And it is this stage that I'm going to go forward and show you, after we answer some questions, I'm going to go forward and show you how we use our vertical bar trading patterns first and foremost, and then when we add the software on top of them that colors the bars, giving us a sign of strength or weakness accordingly, how we have really, we do get a great edge in trading the markets. So Simon, if I can bring you in again, and if we can go over some questions at this stage before I go into the latter part of the presentation.
Sure thing. Thanks, Ian. Okay, so let's start with a couple of comments from Alan saying, is the price action method more accurate on the daily time frame than an intraday time frame due to the choppy action of the markets?
Now, if you're analyzing a single vertical bar, a weekly bar is going to be a stronger platform as compared to a daily. A daily will be stronger as compared to a 60-minute. Right the whole way down, a 15-minute is going to be stronger than a 5-minute. But this is where analysing a single bar is important and very important. But if it was just that simple, it would, too many would be at it. It wouldn't work. But certainly being able to analyse a single vertical bar correctly, and yes, to answer, I assume the questionnaire was in relation to analysing a single vertical bar, and yes, to answer the question, it is more powerful to look at it and more accurate to read it in a single as compared to an intraday time frame. And this is why we need the vertical bar trading pattern sitting on top of each thing. But what I will say on that perspective, no matter the time frame that I would take a trade on, whether it be a 1-minute chart, I would not take a long signal on a bearish bar, or I would not take a short signal on a bullish bar.
Okay, staying with Alan, second part of the question. Do you mean, Ian, that the Dow needs to break the 22380 level before it will change in the down direction?
The objective on the daily price action as per yesterday on the Dow, I'm just trying to find did I use the Dow today? Did I? I think I did, didn't I?
This is about 7 or 8 minutes ago, yeah.
Well, the objective yesterday on the Dow 30, it was a bearish bar, and therefore the objective today would be to take yesterday's low out to the downside. Now I know what we've rallied to the upside so far this morning, but that might, remember, what we're talking about here is putting probabilities in our favor. So we're all working on probabilities, but the good thing about it is that we know to the exact point when we're wrong. In other words, we know that if it doesn't break the low, I just can't find that particular chart, apologize. There we are there. Yep, there's the chart there, sorry. We know that this objective here, that is a bearish bar. And you can see that the day before, it was a bullish bar and it broke it to the downside. We know that when it broke that there to the downside, that is a bearish scenario. Now, the Dow has been making these kind of price movements this last period of time, and that may further indicate that perhaps we are setting up some sort of a trend change. When you get price action objectives, even in the larger time frames, not sometimes being as accurate as they have been in the previous moves up or down, it can indicate that particular move is perhaps coming to an end. And let's face it, it has went from these levels at 21,600 to 23,600, 2,000 point moves.
Okay, thanks, Alan. I hope that that helps your question.
So Alan, sorry Simon, just to go, remember, it's not until it breaks yesterday's high in the Dow would the bearishness of the daily bar be negated. That's the long and the short of it.
Fantastic. Okay, let's go to PW. Ian, he says, how can you define the bullish bar again? You just missed that. So, or I don't PW. So can you just quickly define?
I sure can. Yes. Now we're talking about open, high, low, close charts here. And a bullish bar, and again, reversing the scenario would be a bearish bar. A bullish bar is when you've got a close that is closer to the high of the bar as compared to the low of the bar. And the reason being, and if you think of it logically, everyone, why this is a bullish bar is because the buying pressure comes in at the low. That's why a low is made, when the buyers overcome the sellers. And when that market rallies upwards and it closes, as this one does, above the midpoint, the mid-range of the bar, the balancing point, if you can imagine if this was on a set of scales. And that is when we determine the buying pressures from the low point to the close. So in this particular example, these hypothetical figures, this has got 80 points of buying pressure. The selling pressure on this bar is from the high price to the close. And therefore, it was only 20 points of selling pressure. So a bullish bar is find the mean in any bar. Find the mean. If the Dow Jones yesterday was trading at 23,300 and the low was 23,100, there's a 200-point move. The mean is 22,500. That's exactly so. If it closes above that, the objective is for it to break to the upside on the next trading day, or certainly if not the next day, that is the objective, that if it takes 1 or 2 days trading within that range, you know that the only time that bullish bar has failed is when it breaks the low. So does that answer that question, Simon? That is a bullish bar. A close above the mean. A bearish bar is when a close is below the mean. And visually, you can see this bar has been a bullish bar. Visually, you can see that there's a bullish bar. Visually, on a real-time FTSE chart, you can see that that's a bearish bar. The close is closer to the low. A bearish bar. The mean would be up around here. You can see that's an inside bar. Right, slightly different again. Part of our basics of price action, a part of what we cover on my complete methodology. A bearish bar, close below the mean. Bearish bar, bearish bar, bearish bar, bearish bar. Any other questions? Not? Simon?
Oh, beg your pardon, Ian, I had the microphone off. Saul is now asking about moving averages. What moving averages do you use?
I don't use any moving averages, Simon.
And that zigzag indicator, you are using the zigzag indicator for direction and trend, yes.
That is what I've really done. What the zigzag indicator is doing there, if you want to call it that, that is just me drawing in the vertical bar trading pattern highs and lows. And that then determines, that's why it looks like a zigzag, because it's higher highs and higher lows. And as I say, it's getting back to what our vertical bar trading pattern is, with a very defined set of rules that we have that enables us to draw in that there as a low, that there as a high, to create this zigzag pattern.
Great. Brad would want to, he says, how often do your signals fail?
Well, the signals are very dependent on obviously market movement, and it depends on what time frame you're trading, and to put percentages on it, I do not know, and I'm not going to try and quote figures that I have no knowledge and no base, no soundness to, Simon, no foundation to, rather, is the word I'm looking for. So it's like anything in trading. What's key in trading, everyone? And remember, there's no holy grail, but what there is you have to be taking 2 or 3 steps forward and only 1 or 1.5 back. That each step you're taking forward, when you retrace, in other words, when your methodology doesn't work, that you're not going back, you're not giving it back. You hear, and that's a very good point that has maybe drawn something to mind. If you see something quite often that's giving 80% accuracy or 87% accuracy or whatever the case may be, many of those methodologies, let me assure you, actually fail. And the reason that they fail is because when they lose, their losses are much greater than their gains. Now, from a professional trader's perspective, that is the complete opposite. They may have lots of small losing trades, but when they get their trading direction and their trading signal correctly, that more than outweighs all the small losses. So it's not just in percentage terms, and you should never, in my belief, judge a system based on its accuracy as such. All right, yes, of course, to a degree, if you have something that's only accurate about 2% of the time, it's going to fail. But I think the average professional trader, whether you be in the City of London or whether you be in Wall Street, would have an accuracy which would be under 50%, I believe.
Okay. Ian, I'm conscious, I'm looking at the time. I know there's a lot of people use their lunch hours for this, so we want to try to wrap up at 2. Let's continue with...
yes, I'll just finish off here quickly. As I say, over my many years, Sorry, Simon?
I was just going to say we've got Peter Watson in the room as well, so just to
Yes, I've got Peter. I've got Pelican at the end here. I have indeed, yes.
go across to Peter for a few words. Okay, I'll hand back to
Brilliant,
you.
brilliant. First class. So I say, over my many years trading my price action methodology, I often thought if there was something I could add to my trading arsenal, something that perhaps could make the setups easier and easier to see and confirm. And this led me to develop my Trend Trader software. It was first and foremost for my own use, now offered to all members of my trading family. And trading the Trend Trader software in conjunction with my price action methodology, it really does put the icing on the cake, so to speak. And you will quickly see how this is going to really give you the trading edge. It is a visual indicator, so in other words, it doesn't clutter your chart. You haven't got numerous indicators. Sometimes I see charts and I wonder where the price bars are because I can see that many blinking indicators on it. So this doesn't do that. It very simply paints the price bars red, blue, or green for a sign of weakness, strength, and neutrality, respectively. And first and foremost, I developed it for my own benefit. And a bit like starting out doing the seminars many years ago, once I realized that price action was beneficial to me, I knew it would be beneficial to others, and the exact same thing applied to the software when I developed it, and I seen how great it was in relation to confirming trading signals and to giving me further confidence that the decisions I was making were going to be accurate. I knew then that would also be beneficial to others. It is a totally authentic indicator, and it is based on the sum total of buying and selling pressures within that particular instrument and time frame. And what's key, folk, here, it works in all financial instruments and time frames. And when I talk about being authentic, what I mean, it does not repaint the bars. If it gives you a blue bar and the market decides to go down next, that blue bar will remain always in place. It will not change. And the reason I say that, it's nothing more horrible that you're looking and trading something, and all of a sudden you're taking a signal based on, say, a blue bar, and the market starts to go down, and all of a sudden you go and look at your chart 15 minutes later and say, well, hold on, I took a long signal based on a blue bar, but that bar has now changed colour. I don't see no blue bar. It's now a red bar. If my software gives you a blue bar, whether it be right or wrong, at that particular time it was telling you, me, or any user that there was more buying pressures, more buying ticks in that market than there was selling pressures. Therefore, that market will, bar will remain blue, and vice versa for red. And here's just a couple of charts we skimmed through. Again, this was on Monday, Euro US dollar, morning of the 14th of November. Look at the signal, the chart underneath it here. This is a 5-minute chart. The chart underneath it is a 15-minute chart. I like, again, what we teach. We like to have a guidance chart, and what that does, that helps us to be trading off a smaller time frame, but also in conjunction with what the bigger picture is doing. Now, this guidance chart is blue, but providing if this first signal came in here on Monday morning and this guidance chart had been red, I would not have been taking the buy signal. But if it had been green, that was giving me an amber trade to take it, providing the guidance chart is not in the complete opposite. And again, we haven't time to talk about guidance charts. It's all part of the training I do. But again, you can see there was that signal, 100 pips in a trading day, trading a 5-minute chart. Beautiful. Started off with a higher vertical bar trading pattern low, a higher high than the previous high. It was to the left, a higher low, and by goodness, look, we got the signal, and you couldn't have went much wrong. Here's the Euro New Zealand dollar in a 60-minute chart. A signal came in on the 9th of November, 167.40, now plus 400 pips. Just a week ago. Euro dollar. Euro, this is wrong, sorry folks, that should be the euro pound. It's not the euro dollar, that is a typing error from me. This is the euro pound on the 13th of November, 0.8878. There was a 73 pip move as per the screenshot. Dow Jones 1 hour chart. 1 hour chart, folk. Look where the Dow Jones, look where the software picked out the buy signal. 22,364 and stayed with it. 1,238 points the whole way up. Only one bit of green here. Now I started to go red recently. US Canadian 13th, 14th of November. Again, vertical bar trading pattern, highs and lows, zigzags. As our attendee said, yes, that's our highs and lows. But the blue bars are there with our buy signal. The market went from down round here, right the whole way up. That there is the same chart that I showed earlier without the software on. And it just shows you, although this had changed trend, this is the power of the software, folk. It remained blue. So therefore, if you'd been long from down here, you wouldn't be necessarily coming out. It didn't even go green. The strength was there that much. The software was there. This is what helps to keep you in trades, maximizing the trend. Bitcoin. I mentioned it to you earlier, showed you a chart, a recent chart. Here was the sell signal that came in last Friday. 1,500 point move on a 30-minute chart. We picked it to perfection. Now, admittedly, 150 point stop. So if it hadn't worked, we're going to lose 150 points. It fell 1,500 points. Well, out of that move, you can't lock in 12 or 1,300 of them, folk. You shouldn't be trading. Aussie Japanese yen 1 hour chart, 219 pips, blue signals. Microsoft, just to show you that it works in daily, this is a most recent chart, a 40% move from its buy signal at $60, trading now at 82. Visa daily, buy signal at $89 in May this year, now trading at 110. Look the way it's picked it the whole way up. Vertical bar trading pattern, highs and lows the whole way up, blue bars. Google weekly chart, 50% move since its signal on a weekly chart at $699, now trading at 1,036. Apple daily, US Canadian, this is the last chart we're going to look at, and we're coming up to the 2 hours. No signal, no software, with software. The exact same chart, so you can see the benefit of being able to use it. But please remember, what I have demonstrated is not theory, it's not just textbook, it's a proper professional practical methodology. That is exactly what I do every day. You can apply the price action material you've seen today now. You can use the analysis of single vertical bars, and you can take it with you and start looking at the markets in a different light, I'm quite sure. I know that learning my price action methodology in depth and combining it with my unique trading tool will make you a more profitable trader. But I am pleased to announce that you have now got 2 choices. Up to very recently with only 1 choice. Become a full member, folk. Learn the methodology. Now we have 2. Learn my methodology yourself and become your very own discretionary trader using a totally professional methodology. That is choice number 1. Choice number 2 is join my trading group on the Pelican app and take the easy route and follow my trades without having to learn anything. And I will bring Peter in 1 second. Now, full membership benefits, you will have access to learning our complete price action methodology from beginning to end, learning the vertical bar trading pattern, learning money and risk management techniques, learning how to use multiple time frames to enhance timing. This is all done through videos on our website, through a weekly live trading room, regular members training webinars, and you will have full use of the Trend Trader software, including all future updates, which if you become a full member, will always be free of charge, and also one-to-one personal tuition and unlimited email support. The total cost for a lifetime membership on our website is normally $14.97. As a special discount today for this event, there's a £500 discount, reducing the cost to $9.97. And Simon, if you would like to put that link into the, perhaps you already have the link in, have you?
I've just posted it now, Ian, for you.
Thank you. If any of you wish to avail of that offer, it is on. It is on today. It's on for the next day or 2, to be quite honest. Now, the benefits of joining my group on the Pelican app means that you've no learning to do yourself. You simply copy my trades for a monthly cost of £97. Now, there is an offer that Peter is going to offer to you for those of you that may want to join me on my Pelican app. I haven't got the code here at the minute, but no doubt it can be posted again. Simon will post it. Now, the trades in my Pelican, if you wish to join me, you would search for the Be a Winning Trader group. And over this past number of weeks, since I've joined and since I've been a mentor on that, on the Pelican, with the Pelican guys, have been pretty successful. Now, I expect to initiate a minimum of 3 to 4 trades per week, and to be quite honest with you, quite often more if I'm trading the indices. But most of my signals, certainly in the Forex markets, are based on the 60 and 240-minute charts. The main instruments I would be taking trades on are the Dow, the DAX, and the FTSE. The Forex would be the cable, pound dollar, euro pound, pound yen, US dollar yen. All trades on the Pelican, on my app, will have stops, but they will not necessarily have targets, for the reason that we try most of the time to maximize the trending move as much as possible. And there's just a screenshot of some of my recent trades in the Pelican app. This is where we are, 188 on the pound dollar, trading at £10 per point. The DAX with plus profit of 163. There was the DAX again, and another trade at 406. And there's where you can see a little bit of the social media side coming in, where I explain what I've been doing. And indeed, I've just a new group that's beginning on Pelican, which is the Be a Crypto Trader group, which will be just specifically at the outset be trading Bitcoin. Stops are going to be a minimum of 130 points, folk. But again, look at it. It is totally free to join at the beginning. We've had some phenomenal trades. The software's picked out some phenomenal trades on Bitcoin, so it has. And it's just a new group I wish to start, and you'll be able to follow me. But if I can hand you back to Simon, I would like to thank you all for your time. Any questions come through Simon, and it can be forwarded to myself, and we'll put you on to Peter to speak about Pelican.
Yes, thank you, Ian. We have posted these links in the chat box. You've got the link to the Pelican page to download if you're on your tablet or smartphone. I believe a desktop version is on the way. You've also got your email address posted in that box, Ian. I know a lot of people want to connect with you to ask you some more questions before committing to the software, so that email address is there.
Yes. Right.
If you're happy to go right ahead.
The email address, Simon, sorry for talking over you. The email address to use is ian@beawinningtrader.com.
Oh, Ian, I beg your pardon. I've posted your private one there. So
yeah.
You'll...
ian@beawinningtrader.com.
Be flooded with emails this afternoon to your private box. Great.
Right. That's okay.
Let's bring Peter in and see if he's there, so if you can tell us just a little bit more about the app and Pelican and how it's working. Peter, are you there? Sorry to keep you waiting.
Yes, not at all. Hello, Simon. Hello, Ian.
Hello, Peter.
Thank you for giving such a good presentation again, and for everything you've said about Pelican is absolutely correct. As has been mentioned, perhaps if I just very briefly start from the beginning. So obviously, to access Pelican at all, you will need to download the app, and that will either be a matter of going to the App Store on an iPhone or an iPad, or on an Android phone, going to Google Play Store, or a tablet or an Android phone. Looking up Pelican Trading, downloading it, you'll automatically be set up with it's free to download, and you'll get a free demo account. Then you need to just go to Discover, the Discover section, where you'll see a list of suggested groups. Within that is Be a Winning Trader, Ian's group. You tap Join. As you're lucky enough to be listening to this webinar, you'll get a free code, which may be in the box, which is ZER123. ZER123. If you input this code, there's an option to do so when you join the group. You will get in for free for 1 month. After that month, it will turn to the normal subscription of £97 per month. When you access it, and you can see the pictures up on the screen now of what a trading wall on Pelican looks like. So you've got Ian's trades, comments, So yes, you get signals from him. You also get his comments, which is pretty interesting stuff. If you want to know what's going on, it's possible to copy the trades by tapping the three dots on the right-hand corner, bottom right-hand corner of each trade ticket. As I say, you can do this with a demo account or a live account. A live account is certainly not a compulsory thing. So I think any questions, I could talk about this for hours, but I think any questions, if you get in touch with us at support@pelicantrading.io, myself or someone else will get back to you to help you find Ian's group. And if everyone's armed with that code ZER123, you'll get a free month, and I thoroughly recommend doing so. You get access to Ian's trades, his trading history, his successful trading stats, and you're able to comment yourself, and Ian will speak with you on the app. So,
fantastic,
Simon, I think.
Thank you.
If no problem.
Yeah, I think we've put all these. And just to reiterate, everybody who wants to get in touch, you can do either through Ian or myself, or direct to Pelican themselves. Ian, thank you, Peter. We'll let you go now. I know you got a busy day on, so we'll come back to you.
Great. Thanks, guys.
Many thanks again.
Thanks, Peter. Thank you very much. Thank you.
Thanks, Ian. Thanks, Simon.
And Ian, just another couple of questions before we finish, if that's all right. Mahesh.
Yeah.
What platforms do you actually use? What you've got your indicator, but how does it connect with a platform?
Yeah, sorry. Something I should have said, Simon. I apologise. MT4, TradeStation, and NinjaTrader are my three platforms presently that I have it on. I'm looking perhaps going forward in a reasonable short period of time of bringing it on perhaps for one of the UK stock platforms, and I've been looking at that at this minute in time. I've had some requests to be able to use the software on a dedicated software for the UK stocks, because it works in anything, if you know what I mean. It doesn't matter what the instrument is. Oh. So it's MT4, NinjaTrader, and TradeStation presently, folk.
Okay, and again, if anybody needs any help with that setting up, you do a sort of a personal call with anybody that gets this.
I do indeed, yes.
Make sure you all get set up and things like that. So.
Oh yes, no, there is a video on our members side of the website of showing that. But I mean, anybody that is in any way having some problems stuck at all, again, we load software for them, so we do, yeah, not a problem.
Yeah, I mean, it's come back to me actually from people that have already signed up in previous months. They've enjoyed the personal touch, shall we say, that you offer along with this. You don't.
Well, I think it's very important, Simon. You know, it's very easily, you know, videos and having hundreds of videos, but I think it's very important when you're learning a methodology and wanting to try and further enhance your skill set when you're financial trading. It's very important that you actually can ring up somebody, have a mentor, as I had many years ago. I think it's very, very important that you can actually speak to somebody that can answer your questions for you, and you can have talk with them and discuss charts. And that's what I very much make it my business to do, because it was important to me in my early days, and I know how important it is to many, many people that join us.
It is indeed. Well, Ian Foster, thank you very much. I think we'll draw it to a close. We've run a few minutes over, so apologies for that. But until next month, hopefully you can give us an update again next month. And thank you for joining us. Thank you for the lesson.
Thank you all very much, and thank you, Simon, for hosting this, and thank you for all the attendees. And again, as Simon's already said, any questions, ian@beawinningtrader.com, or again through to Simon. But thank you very much.
And thank you, everybody, for attending, and we'll look forward to speaking to you again shortly.